Hey, welcome back. It's Jason Walter here, and welcome to my temporary office, by the way. Excuse the background. I'm doing the best I can. So in today's video, I actually want to give you guys an update from Redfin because Redfin just released their latest housing market update a couple of days ago. So I wanted to share this with you guys because there's been some drastic changes happening in our housing market right now due to mainly because of rising mortgage rates, but also a lot more than just that. So with that said, let's go ahead and dive right in. And I hope you guys get a lot of value in today's video. Hope you guys are having an awesome day, by the way, as well. So let's go ahead and dive right in. This is just reported on the 29th of September here. And here's what they're reporting here because this is also a similar trend I've been reporting to you guys as well because of this huge increase in mortgage rates that's causing this lack of housing affordability to get worse and worse as mortgage rates approach 7% right now. Rates right now are just under 7% for the average 30-year fixed in the US for people with exceptional credit, which is drastically different compared to January 1st when rates were at 3.3%. So anyways, it says here the typical home buyer's monthly mortgage payment has climbed $337 more per month. That's a 15% increase over the past 6 weeks to a new all-time record high of $2,547. That's a calculation based on principal and interest only, based on current mortgage rates and also current home prices or current asking prices. So it has climbed 15% over the past 6 weeks alone, a gain of 337 more per month, which is drastically going to be impacting our housing market in the weeks and months ahead. So stay tuned on the channel for that. It says here the extreme volatility and recent surge in mortgage rates has caused many potential home buyers to delay or cancel their plans to purchase a home altogether. And meanwhile, pending home sales dropped to the lowest levels since January of this year. And the share of houses selling above their asking price, or the share of houses selling above their seller's asking price, has fallen to its lowest levels in over 2 years. I have a lot more to share regarding this because in today's video, I'm going to give you guys an update regarding home prices, home sales, pending home sales, as well as active listing inventory, and of course, price reductions as well. And it says here, homeowners are also becoming more and more reluctant to enter the market as well. In other words, we're seeing a lack of new listings because mortgage rates are very close to 7% right now. It says here, even though new listings are down to the lowest levels since February of this year, month supply, which of course is active listings divided by closed home sales, has been growing rapidly as well, reaching 3 months for the first time since July of 2020. So a 3-month housing supply more or less means that at the current sales pace right now, if no new listings were to hit the market, then all houses listed for sale right now would be sold in 3 months based on the current sales pace. This is drastically different compared to the first half of this year because in January, the month supply was actually under 2 months. I believe it was around 1.5, 1.7 months was the all-time record low that was set in January of this year. So the month supply has more or less doubled since the beginning of this year, which obviously has drastically impacted this housing market here because we're seeing this pullback in home buying demand and of course a rise of housing supply, which is causing a lot of price reductions and of course the month supply to increase to 3 months as well. And it says here because the month supply has reached its highest levels since July of 2020, more home sellers are dropping their asking prices as well. And according to Redfin, this is an all-time record high for data that goes back to 2015. And the deputy chief economist at Redfin, Taylor Marr, had a really good quote regarding this trajectory or this volatility of our housing market in a very short period of time here. And he says it's important to remember that much of the housing market data and neighborhood comparables, in other words, neighborhood comparables would be houses that sold recently in your neighborhood in order to gauge your home's value. It says the changes here in the housing market data and also neighborhood comparables being reported are based on home prices that were agreed to a month or more ago when mortgage rates were 1.5 points lower. In other words, when looking at housing market data for houses that actually have sold, that's based on what the housing market was like 1 to 2 months ago. I talk about this on the channel all the time, right? Because 1 to 2 months ago, our average mortgage rates were around 5.5% back in the middle of August. And because mortgage rates are approaching 7%, this is going to be really impacting closed home sales in 1 to 2 months from now. And he goes on to say the following here. A seller should anticipate that buyers are unwilling or unable to pay a price similar to what your neighbor's home sold for just 1 month ago. This is because at the time of this video, which is the 2nd of October, I can't believe it's October already, but the average 30-year fix for people with exceptional credit, according to the Mortgage News Daily, is 6.79%. That's actually the average rate back last Friday, but 1 month ago, on the 30th of August, average rates were at 5.95%. So in other words, rates have increased about 80 basis points in one single month. And because of this giant increase of mortgage rates from just 1 month ago, this is going to cause some home buyers to be priced out altogether. In other words, their lender is going to say, hey, you no longer qualify for $500,000, for example, or home buyers right now may be less willing to buy houses right now for prices similar to 1 month ago. And changing gears slightly, let's talk about leading indicators of home buying activity. In other words, a stark contrast to lagging indicators, which has to do with houses actually have closed escrow. So fewer people are searching for houses for sale on Google. That obviously makes sense given the fact that mortgage rates have increased so much, and that's down 33% from 1 year ago. And meanwhile, the Redfin Homebuyer Demand Index, which of course is an index that measures requests for home tours and other home buying services, was down 13% from 1 year ago. It also says here that touring activity, which of course is real estate agents showing houses for sale to their home buyers, as of September 25th was down 18% from the start of this year. But when you actually look at more recent data though, it's actually much worse than 18%. So here's showingtime.com for real estate showings across North America as of October 1st of this year. So look at this. The orange line right here is for 2022. We're now down 25.5% compared to the first week of this year. Compare that to last year, we're actually up 7.7% compared to the first week of 2021. Also, as I mentioned in previous videos here, we've had fewer home showings across North America compared to the first week of January ever since the middle of July of this year. So for the week ending July 14th, we were down by 0.1%, but back in 2021, we were up 26.3%. And meanwhile, the number of applications or mortgage applications for home purchases was down 29% from 1 year ago. And this is based on data from the Mortgage Bankers Association, or the MBA. And of course, I made a separate video regarding that just a couple days ago. So please take a look at that if you haven't done so already. So let's change gears slightly and talk about home prices across the United States here, at least for these 400 plus US metros that Redfin tracks. And this is for the 4 weeks ending September 25th of this year. So the median sold price was $369,250, up 7% from 1 year ago. Prices have climbed 1% since the beginning of this month, though, after 11 weeks of declines. Now, this is pretty unusual because, as it's been important to you guys, we've been seeing this decrease of home prices for 11 straight weeks now. However, though, Redfin is reporting that the median sold price has increased 1% since the beginning of September of this year. Of course, this is a very short-term trend based on 1 week of data, so I wouldn't make long-term projections based on this short-term trend here, especially given the fact that mortgage rates have been increasing so much over the past 30 days. And meanwhile, the median sold price in San Francisco fell 4% from 1 year ago, and Oakland, California, which is just east of San Francisco, fell by 0.5%, and New Orleans fell by 11% from 1 year ago. Also, the median asking price for newly listed houses increased 10% year over year to $384,750. Also, the monthly mortgage payment on the median asking price home was up 50% compared to 1 year ago. And this is because rates right now are around 6.7%, but 1 year ago, they were around 3%. So here's some charts I want to share with you guys regarding home prices in the US right now. So look at this. The median sold price up 7.4% compared to 1 year ago. But as you can see right here in September, the median sold price has been increasing. Again, this is a lagging indicator what our housing market was like approximately 1 to 2 months ago when the home seller accepted an offer from home buyer, and also when rates were much lower than they are right now. As you guys all know, I'm not a real estate market fortune teller. My crystal ball broke a long time ago. But if I had to guess, I would say that the median sold price is going to increase or actually decrease in the months ahead because of our seasonality of our housing market, but also because mortgage rates are very close to 7% right now, far above levels we saw on August 1st when rates are about 5.05%. So in other words, this increase of the median sold price in the US, I'm guessing is going to be a short-term trend. But what do you guys think? Comment below. Let's talk about the median asking price right now as well. So the median asking price, look at this, has increased also since September as well, up 9.7% from 1 year ago. But drastically different compared to this downward trend that we saw more or less in June and July of this year when the median asking price was declining, just like home prices that actually have closed escrow have been declining ever since June of this year as well. And because of this huge increase in mortgage rates and also this slight increase in home prices, the average monthly mortgage payment has increased to 50% compared to 1 year ago, well above 2021 and 2020. I mean, look at this. Back in 2021, and also let's just exclude 2020. So 2021, the average monthly mortgage payment was more or less flat from April all the way until the end of the year. But look at this year. This year, absolutely insane, going straight up through the summer months, down a little bit when mortgage rates decrease from around 6.4% down to 5.05%. But then again, it started to increase once again around the middle of August when average monthly mortgage rates increase as well. Okay, changing gears slightly, let's talk about pending home sales when a home seller accepts an offer from a home buyer, new listings, which of course is when a home seller lists their home for sale, and of course active listings, which is housing supply. So look at this. Pending home sales were down 21.3% from a year ago, which is the biggest decline since May of 2020. And as you can see right here, pending home sales have been more or less declining ever since May of this year, drastically different compared to the past couple of years as well, because we're down 21% from 2021. So a big pullback in contracts being signed between home buyers and home sellers right now, far below 2020 as well as 2021. Let's look at new listings though. This is also a similar trend I've been reporting to you guys as well. We're not seeing enough houses being listed for sale right now, causing housing supply to stagnate over the past several months now. So new listings is down 13.6% from 1 year ago. It has been declining greatly ever since the middle of June of this year. So because we're seeing fewer new listings compared to 2021 for the past 3 months, we're not seeing this huge increase of housing supply like we once did earlier this year here. So active listings, according to Redfin, is still up 5.5% from 1 year ago, drastically different compared to January 1st, when we were down by over 20% from the previous year. So one thing I want to mention regarding housing supply on Redfin's website here, only reporting a gain of 5.5% on a year-over-year basis is drastically different compared to other websites. So Realtor.com is reporting gains of 29%, and AltosResearch.com is also reporting gains of 29% on a year-over-year basis. I'm guessing it has something to do with how they're calculating active listing count. So moving forward, I'm not going to be looking at active listings on Redfin's website. I'm actually going to be more relying on AltosResearch.com as well as Realtor.com. And I'll try to do some digging regarding this, why the numbers here regarding Redfin's reporting here is so much different compared to these other websites here. Let me share what I mean by this, because according to Altos, inventory right now is 556,000 or just over 556,000 in the US right now. Compare that to 1 year ago, it was 432,000. In other words, a 29% increase in 1 year. And again, Realtor.com is also reporting similar gains as well. In any case, let's have a look at the month supply, which Redfin's reporting. We have a 3-month housing supply right now, which is drastically different compared to January 1st. Because look at this, on January 1st, our month supply was around 1.7 to 1.8 months. And that more or less was very, very similar all the way until we hit more or less May of this year, when we had the month supply very close to 2021's levels. But right now, the month supply at 3 months is far above 2021 of around 2.2 months. And again, the significance regarding this is that historically speaking, we need a month supply of over 6 months to have a buyer's market. But in my personal opinion, as I've been reporting to you guys, I think we really need this number to be about 4 months in order to have a buyer's market. This is because going from a less than 2-month housing supply in May of this year, going to a 4-month supply would be doubling the share there. So I'm guessing that if this gets to 4 months, on a national level, we would have a buyer's market across the United States. And again, I'll definitely keep you guys posted because we're not seeing enough new listings hitting the market, but we are seeing this pullback in home buying demand, which is causing the month supply and also the inventory to also increase in the US right now. Meanwhile, approximately 35% of pending home sales went under contract within the first 2 weeks of hitting the market. In other words, the home seller accepted an offer from a home buyer within 2 weeks of being listed for sale. So about 35% of the time that occurred, which of course is below last year's levels, also below 2020 as well, when the share was approximately 40%. Also, approximately 24% of pending home sales went under contract very, very quickly within 1 week of hitting the market, which is also below last couple of years as well, when the share was approximately 28%. Additionally, the median days on the market is at 31 days, meaning the time period when a home seller lists their home for sale to when they ultimately accept an offer from a home buyer, and also when the house actually closes escrow. So these are days on the market for houses that actually have closed escrow. So the median days on the market right now is 31 days. So it's taking longer for houses to sell compared to 1 year ago, ever since July of this year. Also, here's another lagging indicator of our housing market right now, because 32% of houses sold above their seller's asking price. In other words, approximately 68% sold at or below the seller's asking price. So at 32%, this is far below 2021, when the share was approximately 47 to 48%. Now it's only 31.8%. And again, because this is based on houses that actually have closed escrow, I'm guessing that in the last half of this year, or the last couple of months of this year, this share is going to continue to decrease, given the fact that mortgage rates have also skyrocketed over the past couple of months. On top of that, according to Altos, the share of price reductions right now is at 41.19%, absolutely skyrocketing this year as well. Because look at this, on March 18th or March 25th, the share was 16.94%. So right now the share is 41%. So approximately 4 of every 10 houses listed for sale right now have reduced their asking price already, which is drastically different compared to the first half of this year. Also, compared to 2021, the share was about 29%. Back in 2020, we're at 25.7%, and pre-COVID, we're at 36%. So the share right now of price reductions is far higher compared to the past few years. And going back to Redfin's report here, the average sale to list price ratio is only 99.2%. That means on average, for houses actually have sold, again, a lagging indicator, on average, home sellers sold their houses for 0.8% below their asking price. So they're selling for less than their asking price ever since, when was that? Ever since August of this year. Also, 1 year ago this time, the share was actually over 100%. And the peak was really set in May and June of this year, when the share was 102%, meaning that home sellers were selling their houses for 2% over their asking price. And lastly, Redfin's home buying demand index was down 13% year over year, below 2020's levels, as well as below, of course, 2021. And with that said, please comment below with your biggest takeaways from today's video. Also, if you got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.